Once you have a complete strategy that actually works, you can consistently start to make money. I believe there's an endless amount of opportunities and no limit on the amount of money you can make when you actually have a proper, proven, profitable strategy. Literally, the sky is your limit. I'm going to be showing you guys how powerful 1 minute supply and demand actually is and how often it hits, and most days it genuinely does not fail. It really is possible to continuously take trades like this trade I did take. Just look at how well this hit. This ended up running for so far. Obviously, I'm not going to be holding all the way up there because sometimes it's not going to end up hitting all the way there, but sometimes it will. But obviously, I'm holding just for my take profit and where I always aim to, which we are going to go over. But stuff like this, I can continuously catch because I am super disciplined with my rules. I'm patient. I'm only waiting for the best trades. I don't really care if I'm not taking a trade a day, and I'm not rushing into any setups. Here is another example of a trade I ended up taking. Just look at how beautiful this is. This is off the 5 minute, but it did have a 1 minute. I didn't end up taking the 1 minute though, but here was the 1 minute zone. And following all of our rules, our stop loss is 1 pip above, so 1.5. Stop loss would have been there, so we would have actually been saved in this trade. And just genuinely look at how well this ends up hitting. Just look at how, I don't even have words. This was a 1-7, and then a news dropped, and all this was New York Open, dropped, and it just reversed. But just look at how you can continuously take these trades every day. They don't show up each and every day, but they show up, like, I'd say between 2 to 3 times a week. You can get quality trades like this, and that's all you genuinely need. You don't need to be over trading. Like, I'm taking 1 to 2 risk to reward, so I need like 1 trade a week and I'm good. 1 trade a week and I'm genuinely chilling. So, but I do prefer to take 1 to 2 trades, or maybe 2 to 3 a week, and then I'm completely happy. Here is another example of a trade I took, and now I'm gonna break down just why I took each one of these trades. So let's start off with the first trade that I took. First of all, the first thing we noticed is that we had a surge of momentum. We had like a massive push upwards. Look on the supply, we had a massive push downwards. Look on this other demand, we had another push upwards. So that's the first thing we actually need, is to get a massive push of momentum, and then we draw our zones on the previous bearish candle. So like the opposite of this green candle is this bearish candle. That's where we draw our zones over. And then if we look at all 3 of these examples, they all had a gap directly before them. That one had a gap, this one has a gap right over there has a gap, and so does this one also have a gap right over there. So all of these ones had a gap. That's a super important rule that you need to keep into account. The next thing we are looking for is a break of structure. There we had a break of structure. We broke this high up here, so we had 2 very nice breaks of structure. So look on the supply, we broke the structure right here. Very nice low that we broke there. Let's look at this trade here. We broke the structure there. I'm pretty sure if we zoom out, I did do a breakdown of this trade. I'm pretty sure it also broke more structure if you keep zooming out. So all of my trades need to have a break of structure. Then the next thing we're looking at is, where's the 200 EMA at? The 200 EMA is confirming trend. So if price is above the 200 EMA, then we are bullish. Just look at it. Every time we were above the 200 EMA, look where we were. We were bullish. Then every time price was below the 200 EMA, we were bearish. So the 200 EMA is just confirming trend. And we know that 1 minute or any type of supply and demand works best when we are in trend, when we are following a strong trend. That is where supply and demand works the absolute best. Where if you want to maximize your supply and demand, you need to be trading it in trend. So do not trade supply and demand in consolidation. Focus on when we are in a very strong trend and look for those pullbacks into our zones and then wait for the blast off. So each one of these examples, the supply we're below the 200 EMA. Let me just do that. And then on this example, we are above the 200 EMA. So we're in like a very strong trend. We need to be following trend. The next thing that I love to look at is you need to be looking at what London did. If London was bearish from around 2 o'clock in the morning. If London is bearish, New York is most likely to be bullish, and we see this all the time. This is not going to happen all the time, but most of the time it is like that. Let's look at this from 2 o'clock. So half of London was bullish, and then we had a massive sell-off, so then New York decided to continue a trend. But most of the time, if you look at this, okay, here's another example of where London was still bullish, but that's not actually quite true. If you look at it, London was bullish. Getting into New York session, it was super bearish. I just happened to catch a beautiful trade before that sell-off. So I like to look at what London did. If London was bearish for London, and then we should come into New York with a little bit of an idea where price could end up going. It most likely is going to be bullish. And if London was bullish, New York is most likely to be bearish. That's just the way it is. You can even test this out for yourself and just figure it out. It's really simple to look at, and it's something that has saved me many times from taking bad trades. The next thing we are looking at is my entry, my take profit, and my stop loss. So entry, we get in at break of the candle. You literally wait for the candle that taps, you wait for that candle to be broken, and you enter. Then stop loss, I like to have it 1 pip below the lowest candle in the zone, or the lowest wick in the zone. So 2.1 pips, stop loss would have been at 3.1 pips, exactly there. And just same thing with this example. And this will save you multiple times. Sometimes it is gonna like mess you up. Like this trade, you obviously had to extend your 1 to 2, which is my first target. Like if we had it there, 1 to 2 would have been hit way sooner. But you know, it is what it is. Sometimes it is going to save you, and in this example, it did end up saving you off the 1 minute. If you got in at break of the candle and you had stops at the top of the zone, you would have gone stopped out before the move. So 1 pip from the top there. So we would have, this is the candle that tapped into the zone, so our stops would have been 1 pip above there, which is 1.5 pips. So it would have been straight up at 2.5 pips, and you genuinely would have been safe to catch the rest of this move. And same thing here. If we just zoom in, we have stop loss at 2.3 pips. So 3.3 pips is where our stop loss is going to go, and you would have actually hit 1 to 3 take profit before it came all the way back down, but went all the way back up. So next thing is I am looking for a 1 to 2 take profit. That is my first take profit. That is a non-negotiable where I am holding to. I'm not allowed to get out before then unless I'm closing a break even or closing a little bit before it hits my stop loss. But I don't like doing that. I prefer to hold either till full take profit or full stop loss. Like, it just works the best. So 1 to 2 is your first take profit, and then obviously you can be holding till liquidity. So in this example, you could have held there to that liquidity. You definitely could have continued holding this if trend is very strong. But this example as well, your first take profit would have been at 1 to 2, and you could have held for this liquidity down there. So you just got to look for things and places you could hold to. Like this example, if you try to hold for this liquidity, you obviously would have gone stopped out before it ended up going there, and it didn't actually make it till this liquidity there. So that's why 1 to 2 is my first take profit. The zones that hit the most are zones that have higher time frame confluence. So let's look at this example right here. If we just hop over to the 5 minute, here is the 5 minute. We can also see that we had a 5 minute demand, and in that 5 minute demand, we had a 1 minute demand. These are obviously the ones that are going to be hitting the most and giving you the highest risk to reward and just the most amount of money you can hold to. Like if there's a 5 minute zone and then a 1 minute inside of it, I'm most likely going to try and hold that for a 1 to 3, maybe a 1 to 4 at most. And same with this example, this was also a 5 minute zone as well. So there was the 1 minute zone, and if we just go to the 5 minute quickly, we can see this was also a 5 minute zone. I only took this one off the 5 minute, but there, perfect example. And sometimes you're just not going to get like extra 5 minute zones. Like sometimes it is just going to be a regular 1 minute zone. Like there was no higher time frame confluence on the first trade I took of the year, which is here. So that is just basically what I am looking for. I would genuinely just recommend go back test this, follow all the rules I went through. There is a lot more videos on my YouTube of just things you can look at. But once you have a proper strategy, once you have a complete strategy and you're super disciplined with following all the rules you have set for yourself, things like I just showed you, is so attainable. You can catch these trades every single day when you come to the charts if they show up. And if they don't show up, wait for the next day, wait for the next day after that. If it doesn't come, just be super patient. There's no need to rush in trading. You need to be as slow and most professional as you can. But that is all I have in this video. Make sure you guys keep grinding, keep getting to the next level, and I'll see you guys in the next video.